Welcome friends, this is a video on top-down analysis, basically showing you a step-by-step way I analyze my charts and then get my entries both on the lower time frame and on the higher time frame. Okay, so this video specifically was requested by one of our subscribers and we applaud you for that suggestion, and her name I think is Blessed Essien. So Blessed, this video is dedicated to you. Blessings rather, this video is dedicated to you. Alright, so without wasting much of our time, let's just run it through. I like keeping my video short, as you already know. So I suggest and I advise you do well to actually follow up in these videos, like watch the bits of it in order to understand the concept of top-down analysis. Okay, so in this particular setup, this is USD card and it's a 1 week time frame. Okay, so basically what I'm doing is top-down analysis. I think from the world top down, you already know that I'm starting from the top down to the bare minimum to the lowest, and then you get your entries from there. Alright, so having that said, this is 1 week time frame, and in the 1 week time frame we can observe something. The market is on an uptrend, but this is not really the area of focus here. The area of focus is the little candle down here. Okay, so having observed this and having observed that, has actually reached a key level here, and probably my reverse from here on a weekly time frame on a key level, but that is not actually where I'm going to get my lower time frame entries. So I would want to scroll deep into this candle, see the move of that particular candle for this week. Okay, so this particular candle for this week is clearly bullish. You can see the black is for buy, the red is for sell, so it's clearly bullish. So yes, having observed, yes, we're on an uptrend on this particular candle. I would want to go down to daily time frame. This is basically the top down analysis I'm saying now. Okay, the best time frames for beginners, which is the top down analysis, personally, is what I use is from the weekly time frame to understand my directional bias, or to even find out where the week is going. Then I can then scroll down to the lower time frame, which is the daily time frame, to understand my directional bias. Then 4 hours I use it to get my key levels. Okay, so let me not just disclose everything now. Let's go down so you can like see the charts bit by bit, and then I can explain it as we move. All right, so this is daily time frame, and daily time frame there is something the market actually does repeat the same structure both in the lower time frame and in the higher time frame, so it doesn't have much difference. So whatever happens on the lower time frame, on the higher time frame, if you go out to lower time frame, you still find. So as the weekly, we said that it was going up. Same thing is here. It's actually a little bit bullish at this point. Okay, so this is at the daily time frame. Yes, this is immediate zone I am talking about here. This zone, that is my area of interest. So yeah, this zone slightly bullish from here, break of structure, then down, tapped into here, another break. So I am basically now going to 4-hour time frame. Why am I going to 4-hour time frame? I'm going to 4-hour time frame to find my key level very much clearly. So if you've seen the progressions now, this is the importance of time frame. If you've seen the progressions now, it's from weekly time frame, understanding what the week is doing, daily time frame, finding out the daily move and whatever it is going on at that particular point, then 4-hour time frames to get my key levels. Basically, what has the market done? Has it shifted? Has it done this? Has it done that? So this will be what I'm saying on 4-hour time frame. This was the last low, the last high rather, that caused this break of structure, right? So that caused this particular break of structure. So in the 4-hour time frame, that high was taken out. So basically, what does it mean to us? It's a shift in market structure. It's a shift in market structure. And after this shift, we got a couple of moves down into a key level here. Remember, in the previous video I did yesterday, I talked about what do you call it? Institutional demand and supply. So this area now is my institutional demand here, because it's the extreme order block. Is the extreme. He didn't look for any other order block in between here. He didn't take here. He didn't take this one in between this fair value gap. He came back down deep into this institutional order block and tapped on it and continued moving. So this basically shows us one thing now. Market actually respects institutional demand. So that's not really what I was discussing here. What we're discussing is time frames. So this is on the 4 hours, and I've identified where this market is going. It's going on a down. It's going on an uptrend. So having this observed now, having observed this particular trade amount is just a counter trade into an area of value right here at this point, and then I would take my buys. I'm just waiting for it to get it so I can take buys. So that's why I'm on this particular trade on a much more lower time frame. I think I entered this on 30 minutes, but let's keep moving so you see my thought process. Alright, so having identified 4 hour time frame now, everything is super clear. There is no questions. There is no questioning what this market is actually doing at this particular time. You can clearly see what it's doing, and I'm marking out just the internal range liquidity. The internal range liquidity is both the structural liquidity and the inducement liquidity. Then this is a fair value gap. Then if I am to look into this deeply, it's a mitigation block from here, which the market took a bit, went up, created an engineered liquidity, and then came back to sweep that engineered liquidity into the extreme or institutional demand, and then kept going. So having identified this now, give me a minute, let me just delete this. I need to delete it so you can see what I'm doing. So I'm not really wipe all of them. Okay, so having understood this thing now, I'm going to go down to 2 hours time frame to see more structures, see what's going on also deep down. So this is also what is going on, and it's still showing me the same exact pattern as the 4 hour time frame, meaning that it didn't really change much. It didn't really change a bit in the 2 hour time frame. So same thing, same structure. I'm now going to look deeper into this immediate trades now to see where I can actually take my trades. So from here now, on the 4 hour time frame, we've actually gotten our move from here. But then there is one thing we've not gotten. In this 2 hour time frame, the market actually did shift from here, from an uptrend to a downtrend. So let's take for example now somebody to counter trades from this place into this zone, and the market created a shift in market structure, as in here, a lower time frame shift in market structure. We would want to also look down into that lower time frame shift in market structure to also get an entry, say for somebody that is a day trader or a scalp trader. Someone like that should also look into this particular zone now to get entries either from this block, which is actually the lowest, then or from this zone. That is why my take profit is actually here when market gets here and keeps going up. All right, so this is the bias on 2 hours time frame. Basically the market might do something like this, which I just showed us now. So that is for, of course, 2 hours time frame. Then I would also want to go down to 60 minutes time frame, which is 1 hour. Okay, so this is strategically top-down analysis. I follow from weekly, I get my directional bias, my market structure, I then come down to 4 hours, to 2 hours, to 1 hour. Then my lowest time frame I can go is 15 minutes. That's just for refinement of entries and getting a very, very concise stop loss. You get, so that is basically what I'm trying to do in this particular setup. All right, so in 1 hour time frame, not much has happened here, just a bit of moves from here. This was supposed to be, if market had broken below here, we would call it a change probably to this low. So it has not broken actually. I'm still waiting for these markets to break here, then it will get into this area value and then continue going up. So that's for 1 hour time frame. Then the least I can go is the 30 minutes time frame. Let's see out of the way. Okay, the 30 minutes time frame doesn't show us much more from what the 1 hour time frame shows us. It's basically the same thing, but there are some specific charts that you go to and it's showing more structures. Okay, so you can basically just scroll down to a much more lower time frame and get your moves or something like that. Okay, look at what I was talking about previously in lower time frames to refine entries. So I remember I was picking on a 1 hour time frame, which is this zone now. Remember, I was picking this zone as the extreme order block the market probably will come into and then move, or might actually stop halfway um into this area here, into this structural liquidity here. So this is what will either happen, either stop halfway here or actually come back down into this place. So after picking this on a higher time frame, can now go down to a much more lower time frame to actually refine our entries. That's the benefits of a lower time frame. But for a scalp trader, you already know what you need the lower time frame for. So this is that entry picked now on a higher time frame. As you can see, is looking quite big. Yeah. So just want to refine it a bit, reduce it so it doesn't look too big, it doesn't look too small, just the adequate amount that we need. And then we can target our take profits and our stop loss, basically setting stop loss below here and take profits right above. But if this doesn't happen, then we should probably the market actually takes off liquidity from and then keeps moving. All right, so this basically explains top down analysis. I'll do a quick recap. Okay, I will do a quick recap again on top-down analysis. Top-down analysis is basically moving from a higher time frame, like the 24 hours, the weekly time, and the weekly time frame, to get a structural move, your uptrend, your downtrend, where the direction of the market that you feel the market is going. Then you go to 4 time frame to get your key levels. Okay, the break of structures, the shifts, the all those little confluences you need. Then the 2 hour time frame if necessary. If you have a premium, you can use 3 hours. You can use any time frame you want. Then we can also go to like 16 minutes to find out more internal structures, and then much more lower time frames like the 15 minutes, the 30 minutes, to refine our entries and a couple of other things we need to know. All right, so this basically explains top-down analysis. To Blessing SN, who requested for this video, I think this has delivered what you asked for and the points you need to know in top-down analysis. Thank you very much for watching. Please do also like, subscribe, and share the videos to your friends and your trader colleagues that might need this video as a help. Thank you very much, and see you in the next. Peace.